Good morning, everyone. My name is Chaitanya Rao, and I am the head of product at FinBox. I want to start off by thanking Bank of Baroda for this opportunity to speak about the work we have done in Account Aggregator and also share our views on this space. Quick introduction about myself. I head product at FinBox, and I worked at McKinsey, started my career as a consultant in McKinsey in the financial services sector, and then worked with Amazon and with private equity in Advent International. Let me start off by quickly speaking a bit about FinBox, and then we will get into the presentation about Account Aggregator. FinBox has two product suites. The first one is on credit intelligence, and the other is on lending infrastructure. So in credit intelligence, Finbox provides enriched data and scores, which are very important into the underwriting process. And on the infrastructure side for lending, Finbox provides APIs, SDKs, which are used to build any lending journey and a technology which is used by lenders to manage loans. So today I want to speak about how reliable consented data through account aggregator is a game changer in the lending space. So we will start off by talking about the different use cases of account aggregator, and then deep dive into lending as a use case, which is what Finbox is involved in. So I'll just share my screen and share a presentation that I will talk through. Uh, so let's start off with access to data is the biggest bottleneck in financial services. So whenever any consumer wants a loan, the biggest challenge in providing that loan or credit to that person is access to data. And when I say access to loans, it is mostly formal lending or formal credit. These people then typically have to end up relying on informal sources of lending, such as loan sharks and personal family, friends, etc. Why does this happen? So, what happens is whenever you go for a loan, the first call of resort for any lender is to check what is your bureau score, which is your CIBIL score or Experian or any of this. And for people who are new to credit, they don't have any history or any data about how their lending behavior has been. Have they taken loans earlier? Have they repaid them on time? And this becomes the biggest bottleneck in banks and other lenders' ability to lend to any customer. So that's why for a lot of new to credit customers, it's not about their ability to repay the loans. It's more about lack of information about them, which leads to they not having access to lending. So I can quickly share a anecdote on this. In one of the projects at McKinsey, I was working with one of the banks in Southeast Asia, and they were trying to lend to the small mom and pop shops in Vietnam. And this is similar to our India's Kirana business. And the challenge with lending to this segment was, fairly reliable, did a brisk business, and had good cash flows to sort of repay loans. But the challenge was there was no formal data on them to lend. And one of the projects we did was to put together a lending process for these people, which involved, underwriting them based on data such as size of their shop, the value of the goods in their stores, their social behavior, do they resort to frequent drinking, things of this sort, which is unconsented, unreliable data, and really difficult to collect data such as such. So these are typically the challenges that any lender would face while they are trying to lend to a new to credit customer. And account aggregator sort of solves all of these, and will go over each of the benefits of account aggregator framework in detail as we get there. But this is the sort of burning platform that I wanted to start off with. Access to data is the biggest bottleneck in lending. It's not availability of capital. It's not people's desire to take loans or use credit to build their businesses or for personal reasons. It ends up being having reliable consented data to lend to them. So, how is financial data, mostly shared right now? So, if you were to take a loan, they would ask for your bank statements. This is one of the standard processes, and they would typically it is shared over WhatsApp. You would take a screenshot, or you would try to download it on your phone and then share it over WhatsApp with a bank personal, or send it over email. Earlier, people used to even send it over printouts, fax, or they would take photocopies, etc. They would send PDFs without passwords, all of these. So now the challenges with this way of sharing financial data or bank statements is one, it is liable to fraud. When you are sending a photocopy of a bank statement, it can be tampered with and changed, which leads to possibility of fraud. Now, because there is a possibility of fraud, the bank or the lender has to do its due diligence and check if the statements are actually genuine and what data do they contain, etc. So it becomes very time intensive to analyze these statements. And it is very expensive to do it at scales. You would have to put manual effort. A lot of people would sit, look at these statements, get the data, and then it also puts the users at risk of their own data. If they are sharing their PDFs over WhatsApp, it can reach multiple places. So it's not safe to share financial information in such a way. So these are all the things which how financial data was being shared through without account aggregator. And when I say financial data, I have given the example of bank statements, which is what account aggregator has started off with, but it also applies to everything else from your investment data through mutual funds or your GST data, etc. All of which will also be coming under the aggregator framework very soon. So let's quickly see how the account aggregator will work and will facilitate consented sharing of financial information in real time. So there are three parties over here. This is the financial information providers, which is the banks, mutual fund houses, insurance providers, GST platform, etc. The others are financial information users. These are digital apps that use that provide different services to customers, like wealth management, robo advisors, which is also a flavor of wealth management, and personal finance management, where people give their data to get sense about how they are spending their money, how they could be more prudent with their money, or wealth management, where they can see how they can invest their money, etc. So the way this works is the financial information users would request for data, and then it would go to the actual user, the customer whose data is being accessed for consent. And then once the consent is provided by the customer, the data is got from the financial information providers. So the this process is seamless, easy, and you can see how most all of the data is encrypted, which makes it really safe. And the consent given by the customer is also sort of stored and available for audit trails later on. In the center of all of this is the data access fiduciary account aggregator who provides these services. So account aggregator creates a win for both the users and the financial institutions. One is instant, and I will show you a video of the solution that FinBox has built on top of account aggregator. It's a seamless experience where thousands of rows of transactions are shared from the customer to the lender through the account aggregator framework in milliseconds. It's cost effective. We spoke about how people do frauds, and when you don't need to do when you know that this data is reliable, you don't need to do any fraud checks. It saves a lot of cost on the lender side. It also reduces the time required to extract the data from the statement. If it is a physical statement like a photocopy or even a PDF, an OCR is done if it is automated. Otherwise, it's manually done. So an account aggregator, you get the data in JSON formats, and these are all organized in a way that you don't need to do any of these steps, which saves cost. The third is it's consented data. You know, the example I spoke about Southeast Asia, some of the data that you collect is not consented. This is exactly consented. The customer gives consent, the consent is auditable, stored, and very easy to give the consent through OTP. Fraud free, we spoke about fraud becomes one of the biggest use cases where account aggregator solves the problem. A lot of fraud cases can be avoided if the data comes through account aggregator. And the last one is a very interesting and important one, which is the controlled use. Account aggregator consent is by time and usage. If what purpose it is being used for and what time frame that the financial information user has access to data. It could be one time, it could be continuous over a certain period of time. So it puts the user in control of his data. So like we saw what was happening before account aggregator, you know, most of these data was being shared through photocopies or WhatsApp, etc., which was not safe. Your The user is liable to losing his data, it being available to other customers, also shared without their consent. And it also has the issue of it being really slow and not cost effective. We'll go quickly over the account aggregator use cases. And we'll do a deep dive on lending in particular, you know, which is where Finbox has an expertise and has worked extensively on. There are multiple use cases of account aggregator. Lending is, of course, one of those. The other predominant ones are, you know, wealth management and personal finance. We've seen multiple use cases around this. Personal finance is where you give your, bank statement or your investment data access to the personal finance software or personal finance manager, and they do spend analytics to say that where are you spending most of your money, how can you save more. People have made versions of this like spare change investing. You know, for every transaction that you do, you round it off and the remainder amount is invested into something else. So these are some of the personal finance related use cases where account aggregator makes it really smooth. The other big use case is wealth management, where using your bank statements and your investment history, advice can be provided, portfolio analytics can be done to see, you know, how your portfolio is performing, what additional areas can you invest in, are you investing too little, are you investing too much. So all of these analytics can be provided for wealth management. um, the third one is the one on the right in the center, is around compliance and filings. In when you file your tax, you have to, pay tax on your interest income that comes from other sources, or for that matter, your GST filing. All of this can be done in an automated fashion now that the data is available very easily through account aggregator. Um, Insurance is another interesting use case where there are a lot of insights and analytics that can be done. One of the key things that is very important in a country like India, where insurance is also picking up, most people have no insurance or are underinsured. Given their income and expense level, there is an optimum level of insurance, be it health, or car, or life. All of these insurances, people tend to be underinsured or don't have insurance at all. To access through this data, people can recommend the right insurance amounts and how do they go about it. This can also be matched or linked with healthcare data to come with real-time underwriting and come up with, very customized premiums to customers. Right now, a lot of the insurance premiums are not that customized. It's mostly based on age and a few data points available from healthcare systems. Adding reliable data to account aggregator can build, you can build really interesting use cases in insurance as well. And then there is AI-driven fintech, where neobank offerings and new products, cross-sell, upsell can be figured out, or new products themselves can be built by looking at large streams of data of how people have been using their funds, resources, etc. And the final is lending. Lending. There are multiple use cases in this. These days, a lot of loans can also be underwritten based on cash flows into a bank account. If you have a stream of income coming into the into your accounts, then that can be used to ascertain your ability to repay loans. And this is very important for businesses where there is money inflow and outflow, which helps in evaluating and underwriting a customer. Um, the other is instant credit lines or BNPL. Now it's the time of buy now, pay later, and customers can very easily buy now, pay later. So there has to be a limit that is assigned to every buy now, pay later customer. Now, providing this limit can be done very easily using some of the account aggregator data that you get, and not necessarily only rely on bureau data, civil data, etc. Dynamic credit products, because you have so much information, you can build credit products which are personalized, customized to customers, really dynamic instead of being one size fits all products. So these are some of the use cases that we have spoken about. Um, I will, go a bit more in depth on the account aggregator use case for lending. So reliable data that we get from account aggregator, and we can start off with the data that we get on bank statements through the account aggregator. That can be used to provide predictors that can be used in underwriting. For example, there are four that we have spoken about over here. One is financial health of an individual. So from the bank statements, it's very easy to get average balance that is there in a bank account. What is the monthly spends that the customer does? What is the income, number of account, how much loans they are giving, etc. Second is the income and expense profile. You can figure out from these statements, what they spend on rent, utilities, various kinds of bills, how many EMIs do they pay, and what is the total amount they pay per month. How variable is their income? This is an important one. Typically, if you have a salary, then it's very predictable in terms of your income. But a lot of self-employed and small businesses have very a lot of variability in their income. Uh, but with reliable data, you can look at it over a long period of time and come up with how their income would look like. What is the average? How much is the variation? What does the seasonality look like? It also gives you idea about discretionary spending. Discretionary spending is an indication of affluence, spending on things like vacations, expensive white goods, etc. Um, then the third piece of data that you can very pillar of data that you can get from account aggregator is on the repayment behavior. It's very easy to see that if there have been repayment NASH which has been set up and which bounces, standard instructions for paying your EMIs which have been set up on your account which are bouncing. Do you frequently run into inadequate balances? How much funds do you maintain in your account? So these sort of help lenders ascertain the repayment behavior of the customers. And the last is the affordability and eligibility. Based on the income and spend and existing loans, it's easy to find out what EMI can a customer afford for a loan, and hence how much is the max loan amount that can be given. if there are any interest and other charges, etc. The final point over here is another interesting use case where a lender who has a standard instruction to deduct the EMI from your account can choose the date on which this is done. And this preferred date can be ascertained, can be got from your bank statement, which says that what is the date when you typically have more funds in your account. So these are all the different use cases and insights that you can derive from an account aggregator, which can be used in the lending use case. So let me talk about how FinBox has provided this solution. So FinBox has a solution called as Bank Connect that is a bank statement analyzer, and it provides bank statement analysis through three methods. One is through account aggregator, the other is through net banking, and the third is through PDF. The other two are, increasingly going out of relevance as account aggregator becomes more important. But it used to be relevant in the earlier days and still being used by a large number of customers. So the way the account aggregator works is the borrower reaches out to the lender. The lender uses Bank Connect or the infrastructure and credit intelligence products of FinBox, which are account aggregator enabled. So FinBox doesn't own an account aggregator license, but it works with the different account aggregators. So the lender requests for the borrower's data, and this is routed to the account aggregator. And after consent by the borrower, the data comes to the FinBox platform. And then on this data, there is very precise, fast analytics which is done. Income, spend behavior, all of the things we spoke about in the previous slide can be got from the data from this account aggregator based bank transaction data. And then you can also do real time monitoring. If it is a consented request to get account aggregator data for 6 months and on a daily basis, then you can keep monitoring the account of the customer to see if there is a likelihood of a default and flag these accounts early so that collections can be started. So also this actually unlocks a large amount of borrower pools. Earlier, all of this used to be manual, and the amount of loans that could be looked at were very little if it is manually done. Now with this account aggregator framework, it is very easy to look at a large number of loans in an automated fashion and actually even disperse them in an automated fashion. So this makes the process very cost effective. If you see when you start off the bank analysis statement, there are multiple steps. You have to upload the statement and scrape the data or scrape the data using net banking. Then you have to do OCR. Then you have to add cost for fraud detection, all of this, or manually get the data from the statement. So all of this adds to the cost of underwriting a loan. With an account aggregator framework, this cost comes down by 60% for lenders. So this is what I was talking about. This is the experience that we have built at FinBox, FinBox Account Aggregator. FinBox was one of the first people to build a bank statement analyzer based on the account aggregator. There is single tap consent and seamless onboarding experience. So the way it works is step one, the customer signs up for FinBox Bank Connect. Then he selects the bank from which his statements he wants to share. Then the customer approves, which is through an OTP, and the data is sourced. If the customer's bank is not on the account aggregator framework, Finbox asks for permission to access bank statements via encrypted net banking login credentials. So if that is not possible, then net banking is used. Uh, and based on the data, analysis is provided to the lender. The lender uses this enriched data, as we call it, which uses the bank statement to come up with predictors. And some of the predictors we spoke about, like average balance, all of this, using the building analytics on top of the account aggregator data. And then it builds a score, and this is used by the lenders to decide the loan amount. So Finbox also is building a score similar to a CIBIL or a bureau score using the bank statements, which can be used for lending purposes. So the lender can just use that score to lend to the customer, like he would use a CIBIL score with a cutoff. And then the customer is shown the eligible amount within minutes. This entire journey would take hardly a few seconds for this entire journey to be completed and for the customer to get a loan. So this is the drastic improvement that you could see in the lending journey compared to earlier when it would take days for a loan to be disbursed and even months for customer to give all the data for the banks or lenders to underwrite, understand their data, and then to lend to them. So I'm going to play a short video about the Finbox account aggregator in action. This video is available on YouTube, and you can look at it. Uh, just 1 minute. I'll stop sharing this and share sound. Okay. Hopefully, the sound will work on this. I'll go back to the presentation.
So just as UPI has completely transformed.
Okay. Yeah. So we saw the video, and just building on top of it, we've built multiple lending products using the account aggregator, and Finbox has built buy now pay later, credit line, buy now pay in X, overdraft. All of these lending journeys have been built using Finbox infrastructure by various players, and in most of these journeys, there is a step where bank statement data is required and where account aggregator can be seamlessly used. Um, okay. So this is one of the case studies that we have where um, before account aggregator was introduced, there used to be around 11% frauds in the bank statements that were provided using PDF. So what would happen is they would tamper with the statements, they would change transaction data, all of these things. And there are systems which are put to detect these frauds. And the fraud rates used to be around 11%. and then came down to 6% once the account aggregator was launched. So this has actually massively reduced overall frauds, and most people are now moving towards saying that we would only allow account aggregator for sharing of bank statement data, and we don't want to look at PDF statements, etc. So this, I think, very soon, like UPI has become ubiquitous, even account aggregator will also reach that phase very soon, where any financial information which is shared is through account aggregator framework, and nobody does it through manual PDFs, etc. So this is what I was talking about. Now, borrowers are overwhelmingly preferring account aggregator over any other ways of sharing data, especially in digital lending journeys. Lending which are embedded into digital apps, etc. Most customers or most borrowers or most platforms want to only rely on account aggregator. um, I think this is going to only increase as more and more banks become available on account aggregator, and in future, mutual funds, all of these are going to come alive. I think right now there are around 18 banks which are available, and the number is going to go on increasing over the next few weeks. So we are actually at the inflection point where all financial data sharing will happen through account aggregator, and PDF and net banking would all become redundant, is what we see. We spoke about this in the video also, that there is, if you were to look at the lending journey, the customer gives a simple data, all of these steps, and when it finally comes to giving the bank statement, there is a huge drop off. Why is this huge drop off? It is because customers have to go to their net banking, put their password, log in, and then request for a statement, wait for it, download it, upload it. It's a cumbersome process, and a lot of people are not tech savvy enough to be able to download the PDF and upload it. So that leads to a large drop off when it comes to statement bank statement sharing in any digital journey, lending journey. It's high for PDF also, and even for net banking, it is pretty high because the way the net banking solution works is it does scraping, and this is typically blocked off by a lot of banks. Their structure of their web page is changed, which creates a lot of problems. So you have none of these problems in account aggregator, which makes the journey seamless and leads to very low drop-offs. I think account aggregator conversions are 90%, and I think these numbers are just going to go up as the technology becomes more reliable. So that's it from my end on account aggregator different use cases, how lending is a big use case for using account aggregator, and what solutions Finbox has built. Hope this session was useful for all of you to understand about a bit about account aggregator and how it helps in the entire lending space. Thank you, folks.